Good afternoon. My name is Dan Summers. I'm the CEO and founder of IHT Realty Crowdfunding. We're here today to discuss crowdfunding and also introduce you to Andrew Lanoie. He's the founder and president of Park Place Communities, which specializes in affordable housing. We'll be hosting his opportunities within a couple of days. Pretty exciting, very topical to say the least. We got very interested after reviewing the annualized ULI report talking about trends for 2017 going forward, and read that there's over 10,000 retirees and baby boomer retirees every single day. And the amazing statistic is that 47% of them don't have any savings. So obviously that drives an opportunity in the affordable housing space. Social Security is something they're going to be depending on to take care of their day-to-day housing needs, etc. So there's certainly a space in the real estate industry going forward for decades in the affordable housing sandbox. At that note, let me pass it over to Andrew and let him drill deeper into the affordable housing industry and how, in fact, it's a great opportunity to invest in.
Thanks, Dan. That was great. And as a huge proponent of education, I give you and your team hats off for doing a great job on teaching folks on this. Well, perfect. So the objective today is to talk about myself and the company that I started a few years back, Park Place Communities, and really dive into affordable housing and why we're so bullish on manufactured housing and mobile home parks, and spend some time there. And then we'll do a pretty quick sneak preview of an opportunity we have coming out with IHT. So I guess a good place to start is my name is Andrew Lanoie, and I'm the founder and CEO of Park Place Communities. And just a quick bit on my background is I was a talent agent for about 16 years at a company called William Morris Agency, which is a large talent agency in Los Angeles, representing celebrities and musicians and comedians like Tim Allen, Sheryl Crow, and Peter Frampton, and a bunch of others. When the subprime crash happened, my folks who had been retired and living in Florida, they ultimately lost a big chunk of their retirement portfolio, and that was kind of my big eye-opening moment. And because of that, I started looking into reading books on economics and on real estate, and led me to reading Rich Dad Poor Dad and meetings the real estate guys who have a great podcast and a bunch of other educators in the space, and realized I needed to get my money out of Wall Street and really focus more on Main Street. So I started to buy single-family houses in several markets around the United States, and ended up buying quite a few of those in about a 4-year period, and transitioned out of the agency to work as a full-time investor. So let's talk about Park Place Communities a bit. So we are a top 100 U.S. owner and operator in manufactured housing and mobile home parks in the United States. We believe there is a massive need for affordable housing in America today and into the future, and we're committed to solving the affordable housing crisis while consolidating a fragmented industry. We talk about communities. That's really at the core of our organization. And so just to share a few things with you, that we're focused on making a positive impact on our communities while housing thousands of Americans in an underserved market. We have a customized approach with our investment partners to create long-term, stable, passive income not directly tied to Wall Street. And we're believers in education and taking financial freedom into our own hands with a unique approach to creating your own economy. Some big picture goals and objectives is we'll continue to build out our national operations and brand to become a top 5 to top 10 owner and operator in the next 3 to 5 years with north of 20,000 lots under management. We're working on a new construction and development model which will start in 2018, and through the creation of a nationwide affordable housing company, PPC will also have the ability to pivot quickly to other asset classes that fit our housing model. So just as an example, when the next correction happens, if there's all of a sudden amazing deals on C-class apartment buildings and we're operating in 20 states at that point, that may be a fit for us, anything that really falls into affordable housing. So let's talk about the development and the future of America. This is the big number and stat that I like to tell people is that 50% of U.S. wage earners are making less than $30,000 each year. And I guess the simplest way to put it is salaries are simply not keeping up with expenses and the cost of living. The majority of Americans are struggling to put food and on the table and pay their bills. So through renovations, new construction, and creating more net housing each year, we're committed to solving the housing crisis in the United States. So I put this together as, I like to call it the 4 pillars of investing that really applies to what we're doing. So let's start with number 1, which is returns, which I would argue is probably one of the most important things. So we're very bullish on affordable housing and specifically mobile home parks, and part of the reason is the returns, very strong cap rates, lots of value add opportunities. Most of the portfolio that we've purchased has been sub 50% occupancy, so where rents are below market, lots of opportunities to increase lower expenses versus an apartment building, lower cost per unit. We get that economies of scale. We'll go into a really quick case study later, but we've been picking up units between about $3,000 and $12,000, which is very, very low. And what's interesting about this model is the residents own their own homes in most of the cases, so it's a pride of community and very different than just renting an apartment. I thought this is an interesting slide, and this is essentially illustrating the difference between single-family, multifamily, and mobile home parks. And as I mentioned, it was a pretty wide range of what we've been picking up units, but as you can see, just a cost per unit is pretty low on the mobile home park side. So number 2 is demand. And again, going back to this, 50% of U.S. wage earners are making less than $30,000 a year. That creates great demand for affordable housing. Dan had mentioned this about the number of baby boomers that are retiring. That's every day. And the reality is there's just not new mobile home parks that are being built anymore. A lot of cities and municipalities are just not interested in having a new park, and so there's not very many being built, and a lot that are actually being torn down and repurposed into something else. This is a slide on the baby boomers, and that number was at 10,000 every single day are retiring, and just like Dan had mentioned, the majority of them have no savings set aside whatsoever, which is pretty astounding. Another slide talking about very similar on the demand side, estimated net worth. And that it says in 2012 we saw a higher concentration of residents reporting net worth below $25,000. Number 3, diversification, or what I like to call freedom from Wall Street. So mobile home parks are one of the most stable and predictable investments during a recession and recovery. I certainly wouldn't call anything recession-proof, but I do like to say that mobile home parks and manufactured housing are recession-resistant. And again, the returns are not directly tied to Wall Street. So for our last pillar, number 4, is why now in the perfect storm. So we've got retiring mom and pops, we've got the baby boomers, we've got an interesting stat at the park level, 75% of owners expect to stay in their mobile homes for 5 years or longer. A lot of the deals we've done have seller financing and carryback options, which is great to get the leverage. And as I mentioned, a lot of the other asset classes are overpriced. So here's a few fun facts. Mobile homes aren't really mobile. It's manufactured housing, and it costs well over $3,000 for a resident to move out of a park. The majority of the mobile homes will stay and remain in the same location. 68% of the residents are ultimately going to own or buy their mobile home, and there's only about 40,000 parks left in the United States. This is a great quote by the great Wayne Gretzky that says, "I skate to where the puck is going to be, not where it has been." And I think that's a great quote and kind of ties into our affordable housing model. And this is just a couple things I'll skip through quickly, but Warren Buffett purchased Clayton Homes a while back and essentially turned into the world's largest manufactured housing builder, and that's a company that we're starting to work with right now. So he certainly saw the opportunity in affordable housing, and he's always been bullish on single-family housing as well. And here's a great quote from Frank Rolfe, who's a top 5 owner-operator in the space. He says, "We don't want to be in the home business, we want to be in the land business. We want the park tenants to own their own homes." I'm talking about some of the cap rates of this, which are roughly 7 to 12%, which we found on our acquisitions. So I wanted to take a moment and go through 2 quick case studies of parks that we've actually purchased. So the first one is in Emporia, Kansas. It was 220 spaces, and we purchased this in 2015. 1.875 purchase price, 9.6 cap, 220 lots, 8522 price per lot, and it was 19% occupancy. So obviously a big turnaround project. Quick breakdown of the unit mix. We had seller financing on this, which the terms were okay. And the big value add was to install meters, pass through utilities. Lots are below market. Obviously increase occupancy with the goal of refinancing into a better product. And this is a great area for affordable housing. So we knew that going in through due diligence and test ads and all the ways that we do that. So we knew that this was going to be a great park for a long-term hold. So since acquisition, we've increased from 19 to 30% occupancy, and that's this phase has all been through renovations, but we'll be bringing in new homes to that park, which will increase occupancy even more the next 12 to 18 months. And again, talking about the market, Emporia, Kansas is a great submarket and great job drivers and all the other things we look at for a long-term hold. The second case study is 2 parks we picked up, which are actually in one portfolio now in Bowling Green, Kentucky. Here's a couple pictures. Essentially, this was a $500,000 transaction. It was a 15.8 and a 10.4 cap, 80 total lots, $62.50 per lot. One of the parks was at 40%, one was at 19%. Quick breakdown on the unit mix. This was private debt we got on this, so we will refinance out of that debt. Value add there, very similar. To increase the rents, which are below market, increase occupancy, of course, pass through utilities, install water meters, renovate and sell all the vacant homes, which is the increased occupancy side. And again, a great area for affordable housing, and we've had no problem selling units, which is really part of our model, is to renovate. We have to market them in different ways than if you're just marketing an apartment building for a rental. So it's definitely a different process and a little bit more intensive, but that gives us really the pride of ownership in our communities when the residents own their own homes. Some of the same things here. We've increased this to 58% from 30%, representing close to 100% increase in just over a year. Same thing, the cap has increased, and great submarket in Bowling Green, Kentucky. So I wanted to give everyone just a really quick sneak peek or a preview of the opportunity that we're going to have with IHT coming out shortly. It's a debt offering. The first round will be about $1 million. It's a 10% annualized return. Payments will probably be quarterly. It's a three-year term. We have a rent guarantee, and everything's collateralized against titles for the mobile home. So that's the security part. And if anyone's interested in reading the ebook that we put out about 12 months ago, you can text MHP book to 33444 to get a free copy of that. And feel free to reach out to Dan and his team at IHT for basically anything they're working on. Crowdfunding-wise, there's a lot of great opportunities that they're involved with, and also to get on the advanced list for our opportunity, which will be coming out shortly. And that's all I have for today. And thanks, Dan and your team, and appreciate you guys hosting this and having me.